Hey everybody, Thomas Morgan here with 1031navigator.com. This episode is a mini-sode. It is an excerpt pulled from our recent conversation with Aaron Crowley from Asset Preservation Inc. Asset Preservation is one of the largest qualified intermediaries in the country. This episode explores a specific listener 1031 question. And remember, if you're looking to move from a management-intensive property or a low or no income property into a secure, long-term net lease property that provides peace of mind, then go to 1031navigator.com/free, and I'd be happy to provide a free 1031 replacement property consultation. I only do a couple of these a month, and right now I only have one left. You can go to 1031navigator.com/free. Enjoy the show.
Aaron, you bring up a couple of different keywords I want to drill down on, and maybe the question is, how many types of 1031s are there? Like you mentioned, a simultaneous exchange, a delayed exchange, and then I'm going to add a third one, a reverse exchange. How many types would you say there are?
It depends on how you name them. But I said the first one is a swap, and that is every now and then you will find somebody who wants what somebody else has. The prices are about the same, and they literally swap. That's called an automatic exchange.
As a simultaneous?
It should be the same as a simultaneous, but we use the words a little different.
Okay.
We call that I call it an automatic exchange. You don't need a qualified intermediary. You're swapping deeds across the table. You do have to fill out an 8824, but it is an automatic exchange, right? However, once you have a third party involved, if the people are not the same, or there's extra money, so the values are not quite the same, then you need to get a qualified intermediary in the middle. So we call a simultaneous to us.
One step further.
Is if you close in the morning on one property and you close in the afternoon on your replacement property. In the QI world, we call that a simultaneous because it's one day, or maybe it's going to happen within a few days.
Okay.
So we're going to handle the money differently than we would, but it's still a delayed exchange to the IRS because they have 180 days to do it. They are dealing with different people, so it's not an automatic, and we must be in the middle. So even though you're selling in the morning, buying in the afternoon, if you don't have the exchange agreement in place, you haven't done an exchange. Okay. So that's what we call a simultaneous. A delayed exchange is sell 180 days, you must buy. So I'll go through the timing real quick since that's a good segue. In a delayed exchange, from the day you sell, you sell on your relinquished property, the one you're selling. That starts the clock. That's day 0. You count 45 calendar days, and that's your identification period until midnight. So by midnight, 45 calendar days, that's when you must give the qualified intermediary a list of the properties that you're going to choose from. And then you still have another 135 from that day, not another 180, 135. Right. So the complete time is 180. First 45 are key because that's identification, but then you still have 135 to close it. There is one caveat that will close that gap, and that is the IRS says that the earlier of either the 100th and 80th day or the day that you pay your taxes or the day the taxes are due in the year of your exchange is the time that cuts off that date. So anytime you close, if you close after October 15th in 2019 and you're not purchasing your property until you have actually through April, or if you say you closed in mid-December, you have until midsummer to close, but if you paid your taxes April 15th or they're due and you didn't extend, you just shut off that date. So the 180 can be shorter.
So you need to file an extension if you want to use the full 180 days.
Exactly. And you don't get until October, like your extension, you just get your full 180 days. So you want to be really careful that you complete your exchange before you pay your taxes or before your taxes are due, and if you have to extend, because there's no mercy on that.
Okay. And then the next type, a reverse exchange. Could you explain that?
Sure. In your area, I find it more often because you have such unique properties. There's going to be times when your exchangers get in a situation where the property they want as a replacement property needs to be purchased prior to when they've sold their relinquished properties. You cannot do an exchange. You cannot buy from a related party. Therefore, you cannot buy from yourself. So in order to do a reverse exchange, the qualified intermediary, actually, we call it a parking arrangement. We actually park title. We create an entity. We park title on that property. The exchanger funds it because we're not going to come out of pocket. They're going to fund it with their own money, and we're going to park title. So we've got a department, and that's all they do, are reverse and improvement exchanges, because somebody's giving us millions of dollars to put our name on a property. You better make sure that we are doing it right, all of our paperwork is right, and that we're we've got everything in place correctly. So a reverse allows you to buy the property that you want to have even before you've sold. However, you still have that 180 days. We can only hold it for 180 days, so your relinquished property needs to sell within 180 days. Worst case, what happens then, we transfer it, you own 2 properties. So we do a lot when you're in that situation of, this is the property we need. If it's a business, if it's just a rare property, you need it. The issues are, if it's cash, no problem. You still need to take all the cash from the relinquished property into that replacement property. Still needs to be equal to or greater than, essentially. But what we find as a challenge is finding a lender who you're going to say, I need $2 million to buy this property. Oh, by the way, I won't be on title. An LLC, an entity that I'm not part of, will be holding title, at least until I sell this. Many, many banks won't do that. If they need to sell it, they won't do that. The portfolio lenders may, but it's something very crucial for the exchangers to get that lending piece in place prior to doing a reverse.
Right. And how do you typically counter that by saying you're bonded or insured? You're taking title in the reverse.
To the lender?
Yeah, to the lender, yeah.
The only way to counter it is to have the exchanger to have a good relationship with the lender, so that they understand that this LLC is essentially the exchanger.
It's just a placeholder.
It's just a placeholder. Mm-hmm. So when we get them to understand that, but if there's some of the bigger banks, it's not going to fit into their box.
Their model, right.
Their model. So reverses are most easily done with cash, line of credit, something else. We do a lot of bridge loans. We see a lot of hard money lending. They're not easy to loan on, but they're very, very valuable to do.
Okay.
Because you now get to buy the property you want and still have the timing that you need to sell the property. So again, only the 180 days. You don't get any longer just because it's a reverse, but you don't have to worry about the 45.
Okay. And, one thing I see in my business is people have very good assets or things they've owned for a long time. Let's say downtown San Francisco or downtown LA or New York City, and they don't want to sell unless they know they can find
Correct.
a superb replacement property. So that's where reverses come into play, where they could actually go buy the replacement property first, and then they already have a buyer lined up on the back end for their trophy property that they're selling.
True.
And they can do that.
And when people cannot do it, reverses they're more expensive and they take more time. We need time to set up the entity, time to get the paperwork in place. I can do a delayed within 2 hours. If you're sitting at the closing table, you call me, I can get it done. I cannot get a reverse done that quickly. So we need 2 to 3 weeks to get it done. But you can also use negotiation. If a reverse is not going to work for your clients, I tell people, instead of paying me, why don't you go hard on some earnest money? Why don't you see if you can't extend your time out? Could you give an incentive on the purchase, on the sale? Is there ways with your broker's good negotiation skills? Because if you can just close one in the morning, one in the afternoon, you're still doing a delayed, even if it's that close.
Yeah. One thing that a lot of my clients have done is they extend the actual closing period. So let's say they are selling a property and they give their buyer 30 days to do due diligence. In a normal commercial real estate transaction, it might be another 30 or 60 days for closing, but that seller will at their objective or their discretion can extend that closing up to 180 days. I'm not using 180 for 1031 purposes, but they can say, I have another 90 days to go find a replacement property at my discretion. And when I call you up and say, I want you to close, you have to close next week. And that way they're protected and they're able to add that time period to the 180 days.
Exactly. So they get complicated, but there's always one side you can control. And so if, like I said, the seller can control the timing of the sale of their property, they control it. They put contingencies in. So, but we do a lot of reverses. and again, in this area, we're doing more and more as the inventory tightens in the market, we're going to see more and more of them.
But in using the example I just mentioned, that would go back to a delayed exchange. That would fit under that category.
You could save them and make them into a delayed exchange and save them the challenge of a reverse by being able to do that.
Okay, great. And so we touched a lot on reverse exchanges, and for the listeners out there, I think we could do a whole episode just on reverse exchanges.
That does it for today's listener question. Hopefully you got some real value out of that. To ask your own commercial and investment real estate question related to 1031 exchanges and or triple net properties or other passive income real estate, please visit 1031navigator.com/ask. Again, that's 1031navigator.com/ask. You can also leave a question by leaving a direct voicemail at the podcast hotline 970-300-1994. Again, ask your question by leaving a voicemail at 970-300-1994. Thanks for listening to the 1031 Exchange Passive Income and Investment Series. Hopefully it's helping you create, build, and protect your wealth. Talk to you soon.
And remember, this show is provided for your informational and educational purposes only. Be sure to check with your accountant, lawyer, and or other tax professionals and advisors before relying on this information. Although the information contained herein is believed to be accurate and reliable, we do not guarantee its accuracy or completeness, and it is provided without warranty. Common sense is the best practice.